Every trader begins their journey with the same dream: freedom, the freedom to control time, money, and life itself. You imagine sitting in front of your charts, making smart decisions, and watching your balance grow day after day. But the reality hits hard. After a few losses, emotions take control. You chase the market, break your plan, and start questioning everything you thought you knew. This is the psychology trap, the invisible web that captures nearly 90% of traders and quietly drains their accounts. It's not your strategy that's broken, it's your mindset. The markets don't just test your technical skills, they test your patience, your emotions, and your discipline. Every candle is a psychological battle. Every trade is a mirror reflecting your fears and weaknesses. And for most traders, that reflection is uncomfortable. Let's talk about why so many traders fall into this trap. It starts with a lie, the illusion of control. You believe that if you study enough, practice enough, or find the perfect indicator, you can control the outcome. But trading has never been about control. It's about probability, patience, and emotional mastery. You can't force the market to move. You can only control how you react when it does. The sooner you accept this, the closer you move toward consistency. The first trap is fear. The fear of losing money, the fear of being wrong, the fear of missing out. Fear makes you cut winning trades early and hold losing ones to long. It convinces you to stay on the sidelines when your setup appears and then jump in late after the move has already happened. Fear creates hesitation, and hesitation destroys opportunity. The second trap is greed, the craving for more. Greed tells you one trade isn't enough. It whispers that you can double your profits if you just hold a little longer, risk a little more, or trade a little bigger, but the market punishes greed. Every impulsive decision you make for quick profit leads to long-term losses. The third trap is impatience, the inability to wait for your setup, to let the chart form, or to wait for confirmation. Impatient traders think trading is about constant action. They forget that waiting is part of the plan. But professionals know that sometimes the most profitable thing you can do is nothing. Then comes overconfidence. You win a few trades and suddenly believe you've cracked the code. You increase your lot size, ignore your stop loss, and trade emotionally disguised as confidence. But confidence without control is just ego, and ego has no place in trading. And finally, there's revenge trading. That moment when frustration replaces logic. You've taken a loss, your emotions spike, and your brain screams for redemption. So you jump back in, not because of your edge, but because of your pain. It's one of the most dangerous emotional traps a trader can fall into. These traps all have one thing in common: they're emotional. Trading is 80% psychology and only 20% strategy. Yet most traders spend all their time on the 20%. They switch indicators, buy new courses, or blame their broker when the real enemy is within. Hear us the truth that every trader must face. The market doesn't care about your feelings. It doesn't reward effort. It rewards discipline. The traders who win aren't the ones who trade the most. They are the ones who wait the longest. They execute without emotion and review without bias. So how do you escape the psychology trap? First, awareness. You can't fix what you can't see. Start journaling every trade. Not just the numbers, but your thoughts and emotions. Did you enter out of fear or confidence? Were you patient or impulsive? Over time, your journal becomes a mirror that exposes your mental patterns. Second, structure. Create a trading plan so clear that it leaves no room for emotional decisions. Write your rules in stone, your risk per trade, your entry confirmation, your exit conditions. When emotions rise, your rules become your shield. Third, acceptance. Losses are part of trading. Even the best traders lose. The difference is how they respond. They don't chase. They don't spiral. They analyze, adapt, and move on. Every loss teaches discipline if you let it. Fourth, Detachment. Don't trade to prove anything. Don't attach your self-worth to your balance. The market is not a test of who you are. It is a test of how well you can follow your system under pressure. And finally, consistency. Not in profit, but in behavior. You can't control your results, but you can control your habits. The moment your decisions become consistent, your results start to follow. Here's the irony. The less you care about winning each trade, the more likely you are to win over time. Because detachment frees you from fear and freedom gives you clarity. Every losing trader is chasing emotions. Every winning trader is mastering them. The difference between the 90% and the 10% isn't knowledge, it's control. Let's make this real. Picture two traders watching the same chart. The first one sees a breakout forming and jumps in early out of excitement. The second one waits patiently for confirmation. The market fakes out, reverses, and stops out the first trader. The second one stays calm, avoids the trap, and preserves capital. Same chart, different psychology, completely different outcome. The market is a mirror. It reflects back whatever mindset you bring into it. If you bring fear, it gives you losses. If you bring greed, it gives you pain. But if you bring patience, confidence, and discipline, it rewards you over time. You can't escape emotion, but you can manage it. You can build systems that keep your psychology in check. Use alerts instead of constant chart watching. Step away after every trade. Review your performance weekly, not daily. Remember, you're playing a long game? The top traders, the ones who make 6 and 7 figures, are not superhuman. They've simply learned to stop reacting. They trade like machines, not because they have no emotion, but because they've trained their emotions to obey their plan. If you want to join the 10% who win, stop searching for a magic indicator. Start mastering the one thing that truly matters, your mind. Because in the end, trading isn't about predicting the market, it's about surviving it. If this message resonated with you, subscribe and join me in this journey of mastering trading psychology. Remember, a discipline creates consistency, consistency creates confidence, and confidence creates profits. Trade smart, stay patient, and never let your emotions trade for you. Disclaimer: this video is for educational purposes only and should not be taken as financial advice. Trading involves risk, and past performance does not guarantee future results. Always trade responsibly and within your risk tolerance.